Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it.
All right, so on our last trade, we made an exit right here. Adam had enough of this big loss, and that's where we took our exit. You can see that's marked by this indicator right here, or this mark here on the chart. The following day, the market did what we were hoping it was going to do. It had dropped pretty significantly from where it closed at the top of this green to the bottom of the red candle. So it did what we were hoping it would do. And it fell as much as this picture of Lake Mead has fallen over the years. The waterline's quite below where it should be, much like the stock market is much below where it should be. So I didn't get a chance to capture the entry. I mentioned I was traveling a bit and perhaps not able to do some of this live. But you can see on this particular day, there is an open position there. And you can see that we're in. So let's watch and see what happens on the next day. All right, the next day was rather interesting. There was a big drop in the market, but luckily that did not hold. There was a little bit of a comeback, and even though this is a red candle, it is up slightly from the day before, so there is a slight gain. As you might remember, our entry was right here. And we are going to take an exit, and we're going to go ahead and watch that live. You can see an order go in. This one did take a while, so I'm going to speed it up and jump ahead. You can see that trade 33 is over. One thing that I do want to call out is, we took an exit prior here. The market fell all the way down to here, and we actually picked up a little bit of a gain. So this is an interesting case where the market's falling and we are still actually squeaking out a little bit of a gain. So let's head over the tracking sheet and see how that shows up. All right, that trade closed on September 27th. The S&P, according to Yahoo, is 426.05. From our last position, it had dropped 1.63%. That brings its year-to-date total to 12.25%. We actually picked up 0.13%, and this is what I was referring to earlier. The S&P is falling, and we're picking up a modest gain. That was a very small candle, but this is an interesting scenario where even though the S&P is dropping from its prior position, because we are out of the market while it was falling the day before and picked up a little profit on the current day, we actually squeak out a profit. It brings our year-to-date total up to 27.87. So all in all, not too bad, 73% win rate, profit factor of just over 2. Let's take a look at our charts because something interesting happened here as well. On our 3-year look, the S&P is now at, buy and hold strategy is now at 12.25. Our trading of the SPY symbol is now at 12.4. It had also traded, but now it is actually ahead of the S&P 500. And of course, our game is this one, trading SSO 27.87. But in a falling market, trading the spiders seems to do pretty good against a buy and hold strategy. So that's how this trade ended up. What's going to happen next? We'll have to stay tuned.
That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only. It should not be taken or interpreted as advice. Until next time.